Hi everyone, welcome back to Be Rich. Today I want to talk about Asian Paints and the halo effect regarding Asian Paints. First off, I want to talk about some news Asian Paints was making. They have an independent director named Pallavi Sharoff, and she is not seeking a second term as an independent director in the company. And you may be wondering why is that news. Sharoff also serves as an independent director on the board of 197 Communications, and we know what 197 Communications is. It's the Paytm. And the proxy advisory firm InGov Research said that Asian Paints is taking professional services from Sharoff's firm also. And the company did not disclose this. And in an explanatory note asking for more information on all this came to light when InGov was asking all these questions. And she has given being the independent director of Asian Paints in this. So kind of begs into question of a lot of things. Is it a whole bunch of nothing or is it something? This is something interesting. As I was reading about Asian Paints, I thought today I want to talk about Asian Paints. So when I opened the paper and I was reading about all the news related to Asian Paints, this came out. So if you take Asian Paints and if you look at it, their PE ratio over the last, 5 years, you'll see it trailing from somewhere around 67 in 2019. Then during the pandemic, from 7 it dropped down to 58. Then it peaked all the way up to a PE ratio of 120. Then from there, it's been slowly trailing downwards. And recently, in July 2023, it was at a height of 81 price to earnings. From there, it has dropped down to 50. So if you see the stock price of Asian Paints, it went from all the way up an all-time high of 3,568 to a low now of 2,706. Today it's up and it's at 2,847. So why are we talking about Asian Paints? We're talking about Asian Paints because Asian Paints stock is a great example of something known as the halo effect. Halo effect is something Daniel Kahneman came out about, and he says it is a tendency where we think everything about a company or a management is bulletproof. There's nothing that can go wrong. And no matter what, the price of that asset or that company or that stock will go up, and you'll never see down, a downward trend. And this is very true of Asian Paints because Asian Paints has been a darling of all fund managers who are looking for quality in being their biggest parameter. And the company has been having very high PE ratio for a very long time. And they have assumed that it will never look downward and it will remain at this point, and it's been branded as a halo effect. And this basically states that irrespective of the earnings, irrespective of the headwinds and tailwinds and macroeconomic conditions, nothing will stop this company from giving its high returns. Even earnings and valuations were thrown out the window and was just purely looked on as a stock that will keep rising and rising, never ending. Even after a 5-year basis, if you look at it, the Nifty 50 has given you 92% returns, while Asian Paints has only given you 90% returns. Even when you look at that factor, people still, fund managers and everybody, retailers, consider Asian Paints to be a stellar stock to have. Now, if you look at it, the financial year of 2022, it was from 98x PE, it has come down to 50 times PE. So it seems to have the halo effect for Asian Paints seems to be wearing off. And there seems to be a severe sell-off in Asian Paints as investors seems to be slowly waking up to the fact that these kind of earnings are unsustainable. There are fund managers who still believe that it is at a premium, Asian Paints, that it's very cheap. I personally don't think so. At 50 times earnings, it's still very expensive in my books. I think Anand would agree on that too, that Asian Paints at 50 px is still very expensive. And fund managers might be saying, see, it's taken a correction from 98, it's come down to 50. For me to even look at it, I'll have to see a much PE ratio much lower. Because if you compare it to peers, if you take Nerolac, and if you take Noble, and if you take Indigo Paints, all of them are trading at much lower PE. The only one which seems to be near the same PE level is Berger Paints. Now, that doesn't even get into actual expense and profits, and it's not even dive into the balance sheet, because if you start looking at borrowings, Asian Paints long-term borrowings and short-term borrowings and lease liabilities and all that, it deserves further scrutinies. And also, when it comes into the notion of the latest news which I was talking about in the beginning of the video, it begs the caution of waiting to watch what happens. The dividend yield is also less than 1%. So if you take all this into consideration, is Asian Paints at this point something that you should be looking at? I don't think so. But this obsession with Asian Paints is not only true for Asian Paints, it's also true for other companies which also have this halo effect. And it doesn't take you much longer to think about which companies you can think of suffering from halo effect from investors. That's Nestle, of course, Page Industries, ICICI Bank, Hindustan Unilever. These are the other stocks you can look at and see having this halo effect. And another group which also has many companies which are under halo effect is also a lot of the Tata companies. If you look at the PE ratio of these companies, they're really huge proportions. And it doesn't make sense as a value investor if you see any value in holding all this. The reason why I want to talk about halo effect and Daniel Kahneman is because we all are susceptible to this kind of bias. With the constant influx of news about these kind of companies and the constant pressure on us to invest and to diversify our portfolio or find places where quality is there, we tend to overlook the most fundamental things, which is earnings. If you do not look at earnings, then there is no point buying any share because you can't compound. Because you need to have a bit of room for your money to compound in a company. And that is what Anand's tweet was all about, where he talked about compounding, where he said buying at values which make sense is very important, because only if you have the room to compound will it grow. Because if you're looking at to compound at an average of 15% over a period of 20 years, you need that much leeway in the companies for it to grow at an average of 15%. Yes, some years will be high, some years will be low. But if you're looking for an average return in a company, you must have that much of leeway in its earnings and price for it to grow for you. And these companies which I've mentioned, at the current valuations, they don't seem to be having that kind of compounding space. And even if you take the price of Asian Paints, the last 5 years that is, it has gone from 1,400 to 3,500. So even if you look at it in terms of long-term investment, there is no growth space in a company like Asian Paints, is my opinion. And even Anand would probably reflect on this and say the same. There are opportunities at better companies at a much lower evaluation, which allows investors to compound at a much higher clip or a higher rate compared to what you can do with Asian Paints right now. Mind you, that doesn't mean I'm saying Asian Paints is a bad company or is a bad investment. All I'm saying is Asian Paints at this current evaluations doesn't look like it makes sense to me personally. I would wait for a larger correction in Asian Paints than before I think of entering into Asian Paints. And that depends on your own personal evaluations and what you feel is the right evaluation for Asian Paints. By looking at its history and its charts and looking at the industry as a whole, I advise you to come up to your own number rather than depending on a number from me or Anand. So this is why I want to talk about Asian Paints. I want to talk about halo effect and how we form these biases, and we tend to stick to these biases. Even when the market is pointing us at another direction, we find it very hard to let go, and we tend to hold on to these biases. Thanks for watching the video today, guys, and I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.